it's rinse and repeat. It's the same thing. So this is what happens when I download my files. I need to go ahead and open my portable files, and for wherever I have it located, I'm going to go ahead and do it here. So this is what happens when you open your QuickBooks. You need to be able to open up the portable file. Okay, so I've located in LVPDA under Accounting, under QuickBooks class, and here I have my portable files here. And I believe because I'm going to be doing my reports, it's going to be reports 18. Okay, then it's going to ask me where do I want to save it. Now you do have an option, like I said, if it works better for you to work on your desktop, then work on your desktop. But, you know, like I said, if for any reason that you are struggling, because again, every time you convert a portable file into a regular QuickBooks file, it is very heavy. So you definitely want to put, if you don't have enough space on your computer, you definitely want to put that on your flash drive. Okay? But for the program itself, it needs to be on the desktop. Okay, so here I have AM class, and I'm going to go ahead and save it here. All right. Then while it's converting and expanding my portable files, it will ask me to update the file. Okay, so since again, you guys are going to be working with the actual program for 2018, you still need to update it because for any reason, remember, because we're using the internet, every time you make a transaction, it will be updated to today's date. So it will be upgraded to 2020. Now, because you are using a 2018 in the 2018 program, you will be updating only whatever release that's actually new for the 2018. So just like all the files have, at the end of it, it will say, oh, you need to open this file, and the password is already given to you. And it's the same password throughout every single file. It's Sleeter 18, capital SLEETER 18. Okay? So, yes. Okay, now it says you are all set. Okay, and we're going to click OK. And then, okay. Okay, so there you go. So now it's allowing me to do whatever I want. Okay, so Chapter 6 is all about reports, like I was mentioning earlier, right? Chapter 6 is all about reports, and what it's going to allow you to do is it's going to allow you to look at all the reports, or maybe not all, but in QuickBooks Premier. Okay, so in the book that you are testing for, you have over 150 plus reports. Okay, so that is a lot. Now, again, if I just were to go into Reports tab up here, all of these are what you can create reports for. So as you can see, you already have a long list of everything. And if you have a list with a little arrow on it, it's going to give you a lot more other things that you can do with QuickBooks. So here, I want to make reports on my customers. So here's all the reports I can do with my customers. If I want to deal with my vendors, here's all my reports I can do with my vendors. And you have infinite amount of other reports that you can do. So so what you can do with QuickBooks is if you have a customer, you can already create a report for that. If you have an account, which is if you create an account, you're gonna be able to create a report on it. So anything that you do pretty much in QuickBooks is going to it's going to actually give you a sea full of reports that you can do every time you add something into QuickBooks. Okay, so here is all the reports that you can do for QuickBooks is all right here. We also have, if you guys set it up, you guys also have your little icon bar. And what you can find here is if you find your reports. So here I found my reports on my icon bar. And if you do that, it's actually going to show you pretty much everything that's on your reports list, except it's going to show you like a little snippet of what it's supposed to look like. And it's categorized a little different, okay? You still have sales, but it's categorized a little different than it is up here in your reports menu bar. Now, if you do this again, I'm going to go into the first category, which is general and taxes. Is actually company and finances, and you're going to actually see a little sample file of each single report. So then if you don't know what report that you're looking for, you might be able to come here and look at the sample and be like, okay, this is what I want. Okay, and the list goes on and on and on about what kind of reports you want to do. Okay, so that's what we're going to be diving into. We're going to be diving into what you can do, what are the options you can do when you're doing your reports, and which one are the most important to your company. Okay, so again, there are two types of reports. Okay, if you read here, it will give you a little synopsis on each one. But actually on this page, it gives you a summary right here. So make sure that you highlight page 164 because this is important that you know the difference between the reports that you can create. So there are two types. There are accounting reports. Okay, so that deals primarily with your accounts. So that's the significance, right? If you create an account, you can do any of those accounting types of reports. So dealing with your sales, right? Dealing with all your expenses, finding out, your inventory information, finding out your accounts receivable. All of those will fall under your accounting. Then you have the second type, which is called business management. Business management is basically it's information that you can create. For example, so you can plan to either enhance your business or maybe you need to create, it gives you an idea to create, to plan for your business, okay? And what that entails is, things like your contact list, okay? Your vendors, right? In order for you to know, okay, maybe this vendor's not working out for me, or maybe I should expand my networking by reaching out to other vendors, right? So that is what a business management report is going to look like. It's going to contain any of your information in regards to whether it's your customers, whether it's even your employees, your vendors. So basically, it's that kind of information. So this one is basically information that you can take in order to make changes to your company. Okay.
Excuse me, Lynn.
Yes.
So does an accountant do business management? Like would tell a client how to improve their business, or is that a certain type of accountant, or is that
Okay, I see what you mean.
Who does that? I was just curious.
Okay, for if you're a small company, you're more likely going to handle this as well. Okay, so the most common people use QuickBooks for is to do taxes. Okay, now if you use QuickBooks in general for your small business, of course the accountant would be more responsible for the accounting reports, and anybody that would use business management would more likely be your profit manager, your sales representative, your your billing and your accounts payable, like making sure that they may have the vendor contact list, right? So all of those information would just be, it could be anybody as far as this, because we have over 150 reports that you can do. Anybody can do business management. So again, I mentioned a profit manager, a sales representative, right? They're more in charge of all the customers that they are making contact with. Okay. So as far as accountants, yes, accountants can use this information as well to be able to plan for their business. But again, most often business management reports are more geared towards a specific person that helps build the company. Okay, the accountant does not build the company. The accountant just manages the transactions and makes sure that the company is making the correct transactions, or they're falling within the protocols. Okay?
Lynn?
Yes?
Lynn? Okay, let me explain this. First of all, you're being taught financial accounting. You're not a business management, you're not a managerial accountant, you're not a cost accountant. You're a different, that's a different job title, that's a different pay grade. Two, QuickBooks is geared towards towards filling out your tax forms. But again, this does not make you a tax accountant. You are financial. You record the transactions of the business. If it's a small company, then the ownership they're making, should I cut this? Should I add this? Should I change this? That's their job, not yours. Not unless you're a managerial accountant. Okay, again, that's a different pay schedule. That's a different pay rate. Don't be sucked into that. Okay, you don't buy things, you don't change things. All you do is record the transactions, you record the losses, you record the gains. It's up to someone else. It's not your job title, if you're not getting paid for it. So there's someone else to decide what changes need to be made, what improvements need to be made, what needs to be cut. Does that answer your question?
Yes, it does. So it'd probably be a
Okay.
managerial accountant that the owner would have to hire.
Yes. Well,
Yes.
again, it just depends how big your company is. If you are going for a smaller company, you may have the possibility to wear multiple hats. For example, you may be the accounts receivable, accounts payable, and the general ledger manager. So you may have to wear those hats. So you will be dealing with inventory. I'm sorry, you will be dealing with the customers and the vendors, either billing them or receiving a bill. But if you are working in a major corporation, you're more likely to be only scaled down to one skill. So so you'd be if you're just randomly applying for a major corporation, your job title is whatever you're applying for. If you're applying for general ledger, you're a general ledger. If you're applying for accounts payable, you're accounts payable. If you're applying as an inventory manager, that's the position that you're going to be separated for. Okay, but for most small businesses, I think the major categories you would see would be a profit manager, a sales representative, someone that keeps inventory, so inventory manager, and then cost managerial accounting, which is cost accounting. So making sure if you make a product, like how to cut costs and make it so then you make a bigger profit. So there are a lot of categories that can work under the business management. Okay.
Okay. Thank you. I
Yeah.
appreciate that.
Of course. So now we are looking into cash versus accrual basis. Again, this was the very first thing that we touched upon in chapter 1. Okay, it's dealing with how you're going to run your business. Now, if you choose for any reason, which is completely valid, that you want to do cash basis, QuickBooks is actually does not recommend you to do cash basis because all you're really doing is you're just going to utilize only a couple forms on QuickBooks. You're not going to maximize your benefits if you run a cash basis and use QuickBooks because it's easy to keep track of your cash. All you need to have is your bank statement, your checking, and you just, put your transactions in as far as that. But you wouldn't be able to use many of the functions that QuickBooks helps individuals do to make their business more easy, right? You're already making your business easy by running a cash basis. So again, your functions will be a lot more limited if you're going to be using a cash basis in QuickBooks. And then again, if you do accrual basis, right? You're able to create purchase orders. You're able to create payables, receivables. You're able to create all those things, and you would maximize the functionality of QuickBooks because it makes bill payment so much more easier. Okay. So again, for those who were in my morning accounting class, so the older folks, they know what it's like to have to go through all of that stuff, where here QuickBooks is just a click of a button. So yes, so for those who will be going into my class, giving you a heads up, it's a lot more work and a lot more tedious. And just looking at, because you're being exposed to QuickBooks first, you're going to be like, why don't we just use QuickBooks instead? So yes, it is that fine line. So when we're dealing with cash basis, the fine line is the minute you receive cash is when you record. The minute you spend your cash and you pay your bill off, that's when you record. Accrual, you're building your receivables and your accounts payable, right? You're getting a bill, you're not paying it yet, you're paying it later. Okay? So that's what accrual does for you. Okay? So the great thing about reports is you are actually able to toggle them between cash basis and accrual basis. So again, when we were looking about at the reports, what you're going to do is you're going to go to File, and you're going to go to your Preferences. Okay, that's the only way you're able to toggle whether you use cash or accrual basis. And in this one, I think we go into reports and graphs. And here you're able to toggle whether you want to use cash basis or you want to do, under company preferences. This is where you're going to toggle between accrual and cash basis. Now, I'm already automatically in accrual basis. So what's going to happen is I'm going to click OK, right? Nothing has changed. But if I were to go into my very first, let's say my first report, and I were to click it and view it for this week, and I want to run it. So if I were to look at it, obviously it's not going to be that much visible as far as this, but if I were to just click all, you're going to see all these accounts, right? If this had nothing to do, so for my example, my sales, right? If this has nothing to do with your cash for these sales, what you're going to notice is that it's not going to calculate this if you're doing a cash basis. So here I'm going to recognize that I have a cost of goods sold, blah, blah, blah. So this is all my accounts that I have that are running via accrual. So I think what the most that you're going to recognize would be your receivables as well as your your receivables as well as your payables. Now here, this is my a profit and loss. So this is more dealing with sales and my expenses. So let me go ahead and exit out of that. Let's say I want to do, I want to do a trial balance because that's going to show up my accounts for accounts payable and my accounts receivable. So let me go ahead and find where that is. So here's my expenses, and then here, balance sheet, right? If I were to go ahead and I run this report, okay, if you notice, you're going to see checking all of this, and then you're going to see accounts receivable, okay, and then you're going to see here accounts payable down here. Oh, it's accumulated. Total fixed assets. So here, you're going to see your total, your current liabilities, which you're going to see that you have an accounts payable. Okay. If I were to go ahead and exit out of the exit out of this report, and if I were to go ahead and fix my preferences, go to reports and graphs, and I were to click cash, I'm going to click OK. And what's going to happen is going to change all your information. Okay, it's going to make it all cash basis. And if I were to run my report again for my balance sheet, so this one, I'm going to run my report again. And I'm okay. And now, if you notice, you're not going to have your accounts receivable in here anymore. Actually, whoa, you do have it, but there's nothing there. So here, this is what happens when you're dealing with cash basis: is you're gonna have everything not filled in, just like that. Okay, because for this report, I did not receive any cash, nor did I pay any of my bills, so there is no transaction here. Okay. All right, so I'm going to actually go ahead and go back and change it back to my original settings, which was for accrual basis. So I can see all of my numbers again. All right, so yes, so that is what that section is just talking to you about. Switching between cash basis and accrual basis. Okay. And that's how you get there. Now, the accounting types of reports, there are 3 important accounting reports that you need to know. And when I say you need to know, as in like, this is the primary function of what we do as a financial accountant. We need to create these 3 reports that reflect how our business has been doing, okay? And what we do is with this information is we hand it over to our profit managers, our sales representatives, whatever we want to do, we send it to them, and what they do is they formulate a plan. How did we do for this month? Is there something we can do that can be better, right? Do we need to go for a better alternative where we buy a cheaper product and sell it for a higher price, right? So these are the 4 things that you need to do, because as an accountant, your main job is to make sure 2 things. You did your accounting correctly, you followed the rules for debits equals your credits, and that you fall underneath the accounting equation, which is going to be your assets equals your liabilities plus your equity, okay? That is very, very important that those 2 things matter, okay? And this is what these reports help you figure out if you did your accounting correct, okay? So with that, there are 3 types of reports that are very, very crucial, and that is 1, profit and loss, 2, the balance sheet, and then 3 is lastly is going to be your statement of cash flows. Okay. Now, in the accounting when we move into when the newer students move into accounting, there you learn that there are four. Okay, and the one that is missing is going to be your statement of equity. In QuickBooks, the statement of equity is combined with your profit and loss. Okay, so make sure that you know that going through, so that you don't answer the question wrong. You're gonna say what are the statements for accounting reports. Make sure that you know that there is 3 in the QuickBooks, but for accounting there's 4. Okay, 3 being 2 of them are combined, and for accounting there's 4. All right, and we're gonna go ahead for today. We're gonna go ahead and look at our first one, which is our profit and loss. Okay, so what a profit and loss is going to do is it's pretty straightforward. The title of it is going to tell you what did you sell, how much did you sell, and was it enough to cover all of your expenses for you to either make a profit. If your expenses was over what you made sales for, then you made a loss. So this is pretty straightforward on what kind of report there is. Now you do have options. If you were to go through here again, you get to see a little sneak preview of the exact report that you're looking for. But if you already know what it looks like and you just don't want to deal with looking at this, you can go up to reports, and it's going to be under company. Oh, sorry, I'm on the wrong one. So it's going to be under company. Actually, it should be under company and financials. And then here you're going to find all 3 things that we were just talking about. So here you're going to find your profit and loss. You're going to find your balance sheets, and you're going to find your statement of cash flows. Okay, so here for this question here, when we're looking at accounting, right, the 3 important ones are going to be here under company and financials. Okay, and this one is going to ask you to go ahead and find the profit and loss. And you can also, with this, you can also categorize it, right? Maybe you want to find a profit and loss based on the jobs that you release, based on the classes. So remember, if you do based on class, what that does is, because we have 2 classes for this scenario, right? We have a store location in San Jose, and we have a store location here over there in Walnut Creek. So you can do profit and loss based on store location and compare and contrast. You can also do it based on your customers, right? So this is a cool thing. You could do it based on vendors. So there's a lot of things that you can do when you're looking into making your statements, and all of those are here, aligned right here. You just scroll down, make sure you toggle the date. You can always toggle it later, and then you click run the report. Okay. So I think for this example, we want to run the very basic one, which is to run the standard profit and loss report, company and financials, and on the left window it's okay, and we're going to do profit and loss standard reports. Okay, good. So again, we're going to go and look for that standard report. Now you can find it here. It's the first one, profit and loss standard report. So again, let's see, what was the date that it wants us to run the report for? Okay. Okay, so
I'm gonna call and tell Melissa how to cook food. I
okay,
have it all prepped. Okay. Yeah, I know it's okay.
okay. Okay, so we're gonna set it so you usually should be defaulted to January 1st of 2019, and we want to do for the very beginning of the month of of 2019. So we're gonna be doing our report in January of 2019. So what I'm gonna do is here, it's already selected to the most current date, which we do not want. We don't want this month. We want to go for an actual date. So I'm gonna go ahead and click this, and it's going to allow me to choose what date I want to be looking at. So in this one, I want my profit and loss standard, and I want it for January 1st of 2019. So January 1st, 2019, and I want this date to be January 31st. Okay, so it's very important that you toggle the date here. Again, if you forgot to do it, you can always edit it when you come to the page. And then I'm going to go ahead and click run. So here is my profit and loss for January of for January 2019. Again, if you forgot to do it, you're able to toggle it up here and be able to enter the date here. So you can go ahead and change whenever you want to. And you can go ahead and print it too. So if we look here, we notice that if we just scroll down, that we have a net income of $2,774. So here, we are doing good here. We made a profit and not a loss. Okay? So what this does is, if you go ahead and read more into details of what each one is, again, it's going to take all of your sales, and then it's going to minus it against all your expenses here. Okay? So all of the expenses that it takes to operate your business is going to fall under this category here. And this is where you can determine whether you made a profit or a loss. Okay? So again, all of these reports that you're going to be looking into, it's very easy. All you do is just a click of a button. Because we already have all the information given to us, we automatically can go ahead and create these statements, okay? Now, again, these statements usually happen at the end of the period. So whenever you guys choose to close out your books is what you're going to be using or creating to sum up your all your information and making sure that you close it out. And this is what you normally do. You create these extra reports to kind of sum up and making sure that and what you can do with these reports is you can compare them and see, are you doing better this month or are you doing bad this month? So another report that I want to also look into is going to be profit and loss based on class. So here, I'm gonna toggle it again for not this year, but for 2019 of January 1st of 2019 all the way to January 31st of the 2019. So again, I'm going to toggle it here and put it there. And the one thing that you need to do is make sure you click refresh. Once you refresh, this is what happens, okay? So if you look here, you can see that it's going to be separated based on your classes. So for example, here for my San Jose class, my profit is actually a lot, it's a lot bigger than what I do in Walnut Creek. So that's what you could do. You can compare, I actually get more sales, I get more people, I have less expenses for my San Jose location versus my Walnut Creek. Okay? So that's what you can do. You can compare and contrast based on exactly what you're looking for. All right. So again, your book is going to be going over other profit and losses, such as profit and loss for report. Okay, you're gonna have, it's gonna show you, again, all of these are pretty straightforward. If you know which statement or which report you're looking for. So this one I just showed you, the one by class. Okay. Okay, and it's all same thing, rinse and repeat. It's all done in the click of a button. So you do not need to do anything as far as understanding each report. Now, each one is going to give you a little detail of what they are. Again, your QuickBooks has over 150. So, obviously, the book is not going to tell you all 150. It's just based on what you are looking into as far as what report that you want to do for your company. All right. So the next one I want to look into is my balance sheet. Okay. So again, my balance sheet, what my balance sheet is it's going to underline the accounting equation. It's going to make sure that all your assets are going to be equal to your liabilities plus your equity. Okay? So make sure that you understand that that is what the balance sheet does. It makes sure that your accounting is correct and that it follows the accounting equation. All right. So I'm going to go ahead and show you this one just so you know what the balance sheet looks like. And this is the standard balance sheet. So I'm going to go ahead and show you that one. So again, it's all going to be under company and financials.
Excuse me, Lynn.
Yes.
Sorry to interrupt. There's like some background noise that's kind of interfering with what you're saying.
Okay.
I don't know. I don't know if I hear like a TV or something. Oh, it just went away.
I can't tell who it is, but whoever has their microphone not off, then it's going to be you. So okay, there you go. It's gone now. So again, So again, balance sheet, right? It's going to outline your accounting equation. So if you did your accounting correct, your assets should equal your liabilities and your equity. Okay, so this is going to take basically your list of all of the accounts that you've created, and it's going to again, it's going to create a report for you for that. Okay, so I see here my first one is for this one, balance sheet standard, which is what we want. And again, I am going to toggle this so it is for January. Oopsies, I hit the wrong button. So I'm going to go ahead and, what am I in balance sheet? So standard balance sheet. So I'm going to go ahead and just run the report. And I'm going to change the dates from up here because I keep hitting a button over here. So I'm going to go ahead and change this one for, again, January of 2019. So one more, January 2019. And I'm going to go ahead and refresh. So what's going to happen is here, this is my report for January 1st of 2019, and notice that each one is going to be separated by their account types. So again, there are 5 account types, but this one's only going to mainly focus on the permanent accounts. So again, when we dive into accounting 101 after this class, everything that I'm mentioning to you will make a lot more sense. So we have 3 permanent accounts, okay? They are the same as the 3 accounts that have registers, okay? These ones never close out in any given period. And then we have our temporary accounts, which is our income and our expenses, those close out at the end of the period, okay? And depending on your company, whether you choose to either do it every month, you close out your books every month, every week, every day, just whatever it is more convenient for you and allows you to make measurements, okay? So what that does is every time you close out your expenses every period, let's say I close it every month, the assumption is your revenues are never going to be the same exact this month than it is the next month. My expenses may not be the same as this month than it is in the next month. So the great thing about when you're closing it, you can make your measurements and see, it's a good way to measure your profit, but it also is a good way to keep track of your expenses as well as your revenue. So that is a difference between permanent accounts and temporary accounts. So what the balance sheet does, again, it underlines the accounting equation, which consists those three permanent accounts. So here, all my assets are here, okay? And then all of my liabilities are listed here with my equity. So as you can see, my total assets is 50,000, right? And if I were to total up my liabilities and my equity, I should get the same, 50,000. So these two are equal and they balance. Okay, that means all of the things that I own is enough to pay off how much money I owe, and it also pays off. It also, it also includes the value of my company. All right, so that is the balance sheet for you. And then the last thing that I want to show you is going to be the statement of cash flows. So I'm going to go ahead and use the reports at the top, and I'm going to go ahead and go over the company financials, and I'm going to go into statement of cash flows. Okay, so there's not that many. There's only a couple that you can do. There's only two that you can do. So here is my statement of cash flows. And if I were to fix it via January, not 2020, but January of 2019, and I go ahead and refresh this report, okay? So what cash flows does is it's pretty straightforward what the title is. It's understanding how much cash is really flowing into your business and how much cash is flowing out of your business, okay? So cash coming in, meaning due to sales, cash going out due to paying for your expenses, paying your bills, paying any people that you owe. So that is the main purpose of what a cash flow does, is it allows you to see exactly how much actual physical cash is actually coming into your company. So what it does is it's going to take your accrual basis and basically convert it into a cash basis. So again, what's the purpose of having a cash basis versus accrual basis? When it comes to cash flows, if you're already in cash basis, this should be exactly the way it is, exactly the report that it should be. If you're under accrual basis, it's going to convert it into cash. So it's going to allow you to see the actual amount of cash that you're receiving. And it's also going to validate your amount of cash that should be in your bank. Okay? All right. So that is the statement of cash flows. So I'm going to go ahead and stop here since we only took one break. So I'm going to allow you guys to leave early today. So tomorrow, what we're going to do is we are going to